The market's going to collapse.
What's up, everybody? Meet Kevin here, coming to you from the New York Stock Exchange, and oh shit, I have breaking news. It is like -9 degrees. Okay, that's not really what the breaking news is, although it is really, really cold right now. The breaking news is, well, what's been happening in the marketplace and what's changing right now.
This is a bigger bubble than the one that blew up in 2008. And the crisis that is going to ensue is going to be far larger.
We've heard it time and time again. We've heard that we are at the end of this market cycle.
The worst performance in the stock market over a decade ago. This is the period we have experienced the highest volatility in stock prices since the 1930s. We cannot also deny that we experienced the most unfavorable Christmas Eve in Wall Street.
Ray Dalio's told us we're in the 7th inning.
We're in, I would say, the 7th inning of this cycle. I think that we're at the stage in the cycle where interest rates are being raised.
Right.
We're in the later stage.
The baseball game is almost over. Peter Schiff is saying buy gold.
Gold stocks are on sale. That's where the sales are right now on the gold stocks.
And he happens to sell gold. So what are we supposed to do? It is way too confusing out there, but folks, I've got some data for you. Let's dive into the numbers. The unemployment rate in expensive states that people are leaving, like New York and California, plummeted. The unemployment rate in states where people are going towards, like Texas, plummeted. Auto delinquencies plummeted, rock bottom. Housing delinquencies, rock bottom. Student loan debt, while up, delinquencies, rock bottom. A lot of these are things that we're expecting to change or to see a change in pattern to be indicative of some kind of recession. I mean, how many times are we going to hear about student debt and auto debt and housing debt and corporate debt? Corporate debt, by the way, delinquencies, rock bottom. And sure, is debt at a higher level than it has been? Absolutely. But what else is at a higher level? Corporate profits, through the roof. Housing income, that is median and real adjusted, inflation adjusted income, skyrocketed. What about that dreaded inversion of the yield curve that we keep hearing about, which is supposed to be the indicator of a recession as soon as we hit that inversion? Pretty much halted. That is, we're not seeing the inversion happening anymore. And so much lately has been talked about, well, wait a minute, housing interest rates are through the roof. And this was true in the summer. But guess what? They've plummeted also. We're down almost 0.75% from the height in the summer when the market was really starting to suffer. Now, things are much better. So what's going to happen next? Well, that's the big question. But I can tell you this. I predicted in the summer we were going to see housing prices plummet. And what happened? I said housing prices would fall 8 to 10%.
Based on June to July statistics, I wouldn't be surprised if we see 8 to 12% off the top.
They fell 10%. What happened at the end of the year? I'm gonna get run over by a car? Well, we saw a lot of tumult. That's when we saw all of the news articles, the doom and gloom saying prices are falling, the bottom's coming out, we're going back to another 2008. Yet in reality, I was saying at the end of 2018, we need to prepare for Q1 2019 because we're probably gonna see an influx of inventory. But the 3 things that were killing our market in 2018 will not be a factor in 2019. Those things being high interest rates, which we just talked about no longer being as high as they were, the Trump tax plan and the impact of that, which we're not going to have another tax plan in 2019, so we had our adjustment, so to speak, to the new tax law changes, and we don't have a bullish Fed anymore, a hawkish Fed saying, we're going to raise rates. Instead, we now have a neutral Fed that's a little bit more accommodating. So what does this mean for real estate? Well, it was supposed to mean a lot more inventory coming on the market in January. But guess what's actually happening in January, where I thought we might see a little bit more of a dip because of all these houses coming on, and then people slowly reacting like, okay, all right, the market's not bottoming out, let's buy. Instead, what's actually happening is, we're seeing a flooding of inventory hitting the market, but it's all being bought already. The buyers are swooping in much sooner than expected. What does this mean for you and the marketplace? The odds are 2019, especially if rates stay as low as they are now, is going to be an excellent year for growth and appreciation. I'm gonna get a lot of hate for saying that, but folks, prove me wrong on the data. Show me where I'm wrong, because even the US dollar is doing extremely well against the euro. The euro, on the other hand, seeing a little bit of slowing, but that could also be a lingering reaction to what happened to us last summer. Let me know your thoughts in the comments below. Oh, you want to be an expert real estate investor and get my insights before I bring them to YouTube? Make sure to join the real estate investing course. Use coupon code BIRTHDAY2019 for 10% off, and you win. Here's a kettlebell for you, Peter Schiff. It'll be worth more than your gold. So now that we're in a warm climate, which is also where I suggest you buy real estate, what is actually happening on the ground with real estate? What are people thinking the market's gonna do? Well, I can tell you, I visited Idaho Falls, Park City, Utah, Salt Lake City, Utah. Now we're in New York City, and I know obviously locally where I'm from, Santa Barbara, Ventura County real estate, things are blowing up. Inventory is significantly lower than we expected it to be at the beginning of the year, and we're starting to see prices go up. So what does that mean for me? Well, that means my plans of buying something at the bottom, I kind of missed that boat. It looks like the bottom, honestly, was the period right before Christmas, which I always say, November to January is buy time. Well, interest rates were at their lowest point December 15th, right before the Federal Reserve meeting. And right after that, buyers started swooping in, picking up all the deals. In fact, I wrote a full price offer on a $1.4 million fourplex and lost the deal. Well, I guess the next thing you could do is you could buy home goods, because why not buy some nice greenery that's not real in the wintertime? It'll remind you of warm. My hands are still frozen. In fact, look, it's like turning blue. It is a wind tunnel. This is the front door to the Federal Reserve. There's no peephole, no door handle, and no ring doorbell. Hi, officer. Is the market gonna crash? How cold is it?
10 out of 10 cold.